Canada's benchmark index hit a fresh record on Friday, and then the financial sector fell 1.1% in the same session. That contradiction is not a footnote. It is the day's operating condition, and it shapes every capital movement that followed. The S&P/TSX Composite closed higher, propelled by tech and resource names, while the gap between Canada's 2-year and 10-year government bond yields compressed to roughly 60 basis points, down from 85 basis points at the start of the year. That flattening yield curve is a direct tax on bank margins, and investors priced it accordingly. Financial stocks, the sector with the heaviest index weight, sold off even as the headline number climbed. Royal Bank, TD, CIBC, Bank of Montreal, and Scotiabank all report second-quarter earnings within the next week, and analysts at Jefferies warned Friday that almost all the upside is already priced in after Canadian bank stocks surged 16% year-to-date. The macro backdrop is the Iran war's second-order transmission into Canadian data. Retail sales rose in April, but as BNN Bloomberg reported, the gain is concentrated at gas stations. Canadians are spending more money simply to drive the same distance, and the headline growth number is absorbing that inflationary drain, rather than reflecting genuine consumption expansion. That distinction matters because it is the same energy shock that pushed U.S. producer prices up 1.4% in a single month, the largest jump in 4 years, and Fed speculation that the Federal Reserve's next move is a rate hike rather than a cut. Boston Fed President Susan Collins said as much on Wednesday. Kevin Warsh, confirmed by the Senate to succeed Jerome Powell, enters a policy environment where tightening is back on the table. For the Bank of Canada, the calculus is identical but more acute. Markets are now pricing 2 rate hikes from the BOC after oil prices surged on Strait of Hormuz supply disruption. That rate hike expectation is what flattened the yield curve, which is what sold off the financials, which is what created the gap between the TSX record and the session's underlying stress. Against that backdrop, one name moved in a direction that the macro framework does not obviously explain. BlackBerry jumped 17% on Friday.
The catalyst was not earnings. It was not a product launch. BlackBerry's AtHoc platform, the crisis communication software used by 80% of U.S. federal government agencies, received its 2026 Class D high recertification under FedRAMP, the U.S. government's cloud security framework. Class D high is reserved for systems where a failure in confidentiality, integrity, or availability could have severe or catastrophic impact on public safety. That is a compliance renewal, not a revenue event, and yet the stock closed at CA8.51, 48% above the analyst consensus target of CA5.74. The mechanism is not in the certification itself. It is in the procurement timing it unlocks. Federal agencies operating under emergency conditions, and the Iran war has placed military communications, first responder coordination, and critical infrastructure management under elevated operational stress, can only procure from FedRAMP high certified vendors. BlackBerry AtHoc is, according to BlackBerry's own statement, the only crisis event management platform to have achieved this certification level in 2025. Recertification in 2026 extends that exclusive window into next year's procurement cycle. The first capital class to reprice on Friday was not long-term institutional buyers, it was short position holders. BlackBerry stock had been range trading with an elevated short interest ratio. The FedRAMP announcement, combined with a separately announced share buyback program, created a condition where short covering accelerated the initial move and retail flow extended it. Institutional buyers, by contrast, would need to see the certification convert into contract wins or renewal commentary before repositioning. That conversion has not yet been confirmed. That gap between who moved and who hasn't moved yet is where the question lives. The 17% session gain reprices the compliance optionality. It does not reprice the revenue. BlackBerry's QNX automotive software division also reported positive automotive AI revenue growth this week, the second data point that pushed the stock higher over the past month. But QNX and AtHoc address entirely different capital pools. One is automotive OEM procurement, the other is federal government emergency management. The market is currently pricing both improvements simultaneously, and the premium over analyst targets suggest either the analysts are wrong about the revenue conversion rate, or the Friday move incorporated a positioning squeeze that outruns the fundamental case. The condition under which this re-rating holds is specific. At least one named federal agency contract renewal or new procurement announcement attributable to the FedRAMP recertification before the next earnings call. Without that, the 48% premium to target is a position squeeze overhang, not a valuation anchor.
The unresolved question from the FedRAMP rally is whether a compliance gate converts into a contract flow fast enough to justify CA8.51, And that question's answer depends on a procurement cycle that operates on its own timeline, independent of the stock's Friday momentum. The historical frame that fits is BlackBerry's own 2023 to 2024 transition, when the company pivoted away from hardware and began generating recurring software revenue from government and enterprise security clients. That pivot produced multiple false re-ratings, brief spikes on partnership announcements that failed to translate into revenue trajectory changes before the stock settled into a lower range. The pattern? Compliance wins and partnership announcements preceded by weeks or months the actual contract monetization, and the market repeatedly over-discounted the lead time. In the current session, the same lead time risk applies. FedRAMP High recertification is a prerequisite for procurement, not a confirmed procurement order. The macro environment adds a second variable. If the Bank of Canada follows through on the 2 rate hikes now priced into the yield curve, growth-sensitive and technology names face multiple compression across the TSX. BlackBerry at a price-to-earnings ratio of 68.4, nearly double the software industry average of 36.3, per Simply Wall Street's Friday note, is among the most exposed TSX technology names to a multiple compression scenario. A rate hike cycle that flattens the financial sector this week could reach the technology sector in subsequent quarters. The continuation condition, BlackBerry management cites AtHoc contract activity or renewal pipeline growth on the next earnings call, and the BOC holds rates rather than hiking. Under that scenario, the FedRAMP premium has a fundamental anchor, and the stock has room to narrow the gap to analyst targets from above, rather than collapse to them from above. The breakdown condition, no contract confirmation emerges before the next earnings print, and BOC hikes push the TSX's yield-sensitive multiple compression into technology. Under that path, the 48% premium over analyst targets resolves downward, not through a catalyst, but through the slow drainage of a positioning overhang that no new fundamental event refreshes. The verification benchmark to watch is not the next FedRAMP announcement, it is the next BlackBerry earnings call, specifically whether management quantifies AtHoc pipeline activity tied to federal emergency procurement, or whether the call produces only qualitative commentary about compliance positioning. Qualitative language with contract specifics is the signal that the Friday move was a squeeze, not a re-rating. The question the market has not yet answered is whether a compliance gate and a buyback program, arriving simultaneously in a week when federal agencies are operating under war scenario stress, are enough to change who owns the stock, or whether the institutions who set the CA8.54 target are simply waiting for revenue evidence that hasn't arrived yet. Every day after the close, we publish a market wrap and key issue analysis. Subscribe to the channel.